Good afternoon, dividend growth stock investors. It's Colby, the DGI Crab. And I've had a few of you now in the comments below ask me cover PFFA a little bit more closely. So I wanted to make sure that I took a little time aside today, do a bit of a deep dive on PFFA and explain why that is part of my investment strategy for the Tier 4 investor aged 54 and up. If it's your first time here, this channel is all about growing your passive income stream with excellent, stable, and growing dividends. I've split up my channel into 4 separate tiers, tiers 1 through 4. And it's based on your age. Tier 1 investors are younger folks aged 18 to 30, and they don't need to acquire yield really fast. They need to acquire quality companies that are going to grow their dividend at a rapid clip. However, when you get up to the point where you're about 54 and up, if you're still working towards reaching financial freedom with dividends, you're not going to have the amount of time to let the super compounders like Visa or Microsoft or Parker Hannifin or some of those other ones in Tier 1 or even the Tier 2 stocks like your Lockheed Martins, etc., to give you those dividend raises where they're really going to outpace the higher yield stuff that you could buy in the beginning. So, why is PFFA part of that Tier 4 income producing strategy for the 54 and up? Well, I'm going to explain all of my reasoning for that and more, but before I get started, I will let you know I'm not a licensed professional financial advisor. You should always do your own due diligence before you invest in anything. So the Virtus InfraCap US preferred stock. What in the heck is this thing? Well, first of all, I want to just go to the actual Virtus website. So for any of you out there that aren't aware, there are common stocks and there are preferred stocks or preferred shares. So a preferred stock, as it says here, is a class of capital equity that pays regular dividends at a specified rate and has priority over common stock, but not corporate debt in the payment of dividends and in any liquidation of the corporation's assets. Hence the term preferred. So the idea with these shares is that they are going to pay out a higher and more stable dividend yield than a common share of stock, like you're probably used to buying on your brokerage. They're not going to grow in share price or in dividend payout anywhere near as quickly as the vast majority of them. Now, in times of trouble, if a company were to go out of business, this is the capital structure that the company has to take care of when liquidating their assets. They have to take care of their secured debt first, followed by unsecured debt, followed by unsecured subordinate debt, followed by preferred equity, so that's preferred shares, and then finally common equity, which is common stock. So a little bit safer of a hedge against things going really bad for an individual company. But preferred shares, as I said, they're going to give you a higher yield. Now, preferred shares of stock don't give you any voting rights in a company the way that common shares of stock do, but that's not really something that I'm particularly concerned about. As a middle-class retail investor, the amount of votes that I would get in a company's decisions with common shares are going to be pretty insignificant, truth be told. So I'm not necessarily worried about not having voting rights. Now, PFFA, as the site says, they're trying to minimize the concentration of risk found in the preferred market universe. And that's just a common thing with ETFs, right? You get a basket of stocks as opposed to one or two individual ones, and that gives you that diversification and that hedge against risk. They're going to manage the call risk seen in most passive preferred stock portfolios and maximize the strategy's yield to call using modest amounts of prudent leverage. They do use some leverage, and I've seen it can be as high as about 30%, but that's not terrible. That's not terrible. So this is the story on the actual Virtus website. Now let's take a look at the actual ETF performance here on Seeking Alpha. You pull up PFFA, you can see as of today, November 11th, 2024, it's trading at about $22.85 per share. It's performed very well over the last year, up 19.5%. It's been around since about 2018. And as you can see here, it trades pretty flat. Now here, as we saw with just about everything in the stock market, this was the COVID crash. So PFFA not completely immune for market crashes necessarily. It's gonna have its ups and its downs as well. But overall, a very steady and consistent share price. Now, overall, you can see here that it is down a bit since inception, and a big reason for that is preferred shares they're just not going to perform quite as well in a low interest rate environment. Or in a higher interest rate environment, excuse me. They're going to do a little bit better in a lower interest rate environment. And obviously, we've had higher interest rates over the last couple of years, and those are starting to come down. And we may see that actually be good for the PFFA share price overall. Still sitting here sub $23 a share, and pre-COVID crisis, this was pretty consistently in the $24 to $26 range. So you're not going to get explosive share price growth, but you're not going to get a ton of NAV erosion, meaning this isn't something that you can anticipate just crashing and falling through the floor. It could go down in a bad market. Again, like we saw here with COVID, it did take a pounding with the rest of the market, but it has pretty steadily crawled back up. Not as well as the overall stock market, like the S&P 500, but it's done all right. Real quick, let's take a look at the holdings. So this is going to have about 180 holdings in it. So you're getting, let's see, oh, that's even more than that, excuse me, 217 overall holdings. Again, it's all preferred shares here. And then the main thing I don't like about this ETF is it does have a high expense ratio of 2.5%. So that's quite a bit. However, this is an alternative asset class. So I don't research preferred shares really at all. It's a totally different market than common shares. So if you're very interested in common shares, but don't really keep track of preferred shares and what those are doing, this is a really nice ETF to have. It's going to give you a lot of diversification across those markets. And then, of course, the dividends are what we're really looking for on this. And as you can see here, PFFA has a nice yield right now. It's currently yielding in the high 8s. It annually pays out $2.01 every year per share, and it pays out monthly. So let's take a look at the history of those payouts and see what it's done since inception. So as we can see here in 2024, it's been paying out 16.75 cents per share every single month, like clockwork, all year. If we go back to 2023, it was 16.5 cents all year long. 2022, 16.25. 2021, 16 flat. 2020, they did have a dividend cut. So they were paying 19 cents per share back in 2019 and started that way in 2018. Just a nice stable 19 cents a month. Paid out a really large 55-cent dividend at the end of 2019. And then in 2020, we had the COVID crash, and it dropped down to 15 cents a share. Now, that's a pretty significant drop, but it's also not the end of the world either. If you had a pretty nice pile of this going in, you definitely felt that dividend cut. Absolutely. But it stabilized at 15 cents a share and has been very gradually and steadily building its way back. I don't know how quickly it's going to get all the way back up to the 19 cents a share mark, but as we see additional federal interest rate cuts, I think they'll have a better shot at getting to that point. So this will be an interesting one to monitor in January to see what the new monthly dividend payment looks like. Will it just be at 17 cents, or will it be a little bit higher than that? In any event, it's very stable. It's very predictable. It's not giving you a variable dividend payment each month. It's something that you can count on pretty consistently, which is what you're looking for if you're in that tier 4 category. Now, if I pull up my spreadsheet here where I break down the ETF distributions for new money put into your portfolio every week or however often you invest, you'll notice, especially if you've been here for a while, in Tier 4, I split this out into 8 individual ETFs. PFFA being one of those, where I think it's a fine idea to put about 5% of new money into PFFA. Now, you can also get high monthly yield with covered call ETFs like JEPI or SPYI. And JEPI and SPYI have at times done even better. SPYI in particular has been yielding even higher and pays out monthly. So why is PFFA part of this strategy for me? Well, the key is it's an alternative investment class. It's giving you exposure to something that if you are primarily invested in stocks, specifically common shares of stocks, then this is going to give you exposure to something that you don't already have. It's something that is nice and stable, very predictable, high yielding, and monthly paying. Now, I first heard about PFFA, just full disclosure, from Dividend Bull's channel. If you guys aren't aware, Dividend Bull is a huge dividend-focused channel here on YouTube. He's got nearly 200,000 subscribers, and while he and I have different strategies when it comes to investing in dividends, he's more high income, a little bit less focused on dividend growth, whereas I'm all about dividend growth. But he has a very fine selection of really high yielding companies. This is not a guy that chases yield traps. So what I'm going to do is, if you want a second opinion on this ETF, I'm going to put a link to a video to Dividend Bull's channel where he explains PFFA and why he added it to his portfolio. Now, I have compared PFFA against some other similar ETFs in the space. If you go to Seeking Alpha and you're reviewing a stock or an ETF, there's a tab here called Peers. This is a really handy thing to review, and it can show you other types of funds that are very similar to the one that you're comparing it to. So you can see there's Principal Spectrum Preferred Securities, Global X Super Income Preferred ETF. I've gone through and looked at all of these different ETFs, and I'm of the opinion that even though the expense ratio on PFFA is the highest among all of them, this is the one to me that looks like the best bet. So I was in agreement with Dividend Bull on this one. I did my own due diligence on it and made it part of my Tier 4 strategy for adding high yield income right now. So you all should probably do the same. Don't just take my word for it, but you can review the Peers tab here and look at some of the others. You can watch Dividend Bull's video on this as well and see if you come to the same conclusion. For me, I am very happy that if I am in the 54 and older Tier 4 category of allocating at least 5% of new money into this ETF so I can quickly add income now and get to financial freedom. Hopefully, if you're in this age range, if you're not already financially independent through dividends, you're getting very close, and this is one of a few excellent options here that's going to give you that high yield to really turbocharge that income. Let me know what you think of this one down in the comments below. Do you hold any PFFA? Do you know of a preferred share ETF that you think performs better than this one? If so, leave it in the comments and I'll be happy to take a look at it and see if I come to that same conclusion as you. But as far as Dividend Bull and I are concerned right now, this is the one for this particular category, an excellent alternative investment to common shares of stock for you current income seekers. And hey, if you're young, stay away from stuff like this. You still want to get that dividend growth. You'd much rather have a VIG or an SCHD, something that's going to give you dividend raises year over year in the high single digits or low double digits. That's going to outpace something like this. For you current income seekers, you could do a lot worse than this one. I can tell you that for sure. Links also to each video on the 4 different tiers, as well as a video on ETFs, where I break down all these different ETFs and explain why they made the final cut for the channel. Send me any questions you have to dgicrab@yahoo.com, and I will see you on the next one.